Hey guys, it's Josh with the Construction CFO, and today I wanted to go over how to look at a profit and loss statement so you know what you're looking at in your business. If you like this content, please like and subscribe. Please share it with somebody who needs it, because there's a lot of us out there that don't know this stuff. I've only learned this because this is what I've done for so long. And that doesn't mean that you can't learn it as a business owner. You learned how to do your trade, you learned how to be a general contractor, you learned how to do anything that you've done so far. So this is not out of the realm of possibility. This is just simple plug and play, like an Excel spreadsheet, just in a software. But anyway, with that, we're going to get into it. I'm going to go through this high level, looking at the 5 numbers that actually matter to you as the owner and what the bank and lenders and everybody is looking at. And then I'm going to teach you how to look at all the numbers that feed into those 5 numbers so you know that they're correct. So we're going to start at the top. The first thing you want to know about any profit and loss statement is it's a time period. You can do a profit and loss per month, per quarter, per year, per 5 years. You can do whatever you kind of want. And as you can tell up here, I have it from the start of the year to the end of the year. Now, at the point of recording this, it's actually September. And the reason that I might do this is because I have already invoiced for September, which shows up as an October invoice, right? And if I don't include October 1st in there, I'm not going to have anything pop up for income or AR that actually is for the whole year. It's only going to show me to date. So just a little nuance. This is all about timing. It's very specific. You can hide things if you accidentally put it in the wrong year, the wrong month, the wrong day, and then you're trying to pull a report that's in the wrong time period. Very important. Okay, so starting at the top, the 5 numbers that matter. Total income, that's your revenue. That's how much money you have billed for. The way that you take money from a contract into your business is you invoice for it. And then to go from income or revenue on the balance sheet into cash or into your bank is you collect it, all right? So this is all like theoretical. This is accrual-based accounting. So anything on the income is not stuff you've actually received. This is just what you've billed currently. Then we look at the cost of goods sold, cost of construction, the cost of services. However your accounting software labels it, however your accountant wants to see it, it doesn't really matter. They're all the same thing. The cost of doing the thing that gets me money, the projects, right? And that leaves you with gross profit. So total income, revenue, invoices, minus the cost to do the project is our gross profit. And this is really important to mirror against your estimating software and your estimate to make sure that you're actually making money. So you can tell that you're going to make $3 million on the $5 million that you brought in. At least that's what it looks like. So we're still forgetting all of these. Maybe we're not forgetting, but all of these costs are to build the project. What about our office? What about all the things we didn't put toward this, like software, estimating, project manager time, paying overhead, all of that, insurance, all of that, depending on where you put it in your general ledger, where you cost code it, it's going to be down here in expenses. So you have total expenses. This is going to be a total of all of the overhead things. This sample doesn't give you a really clear picture. I'll show you a chart of accounts in another video to show you all the things that could go in there. But just know that this total expenses is equivalent to your SG&A, or it's your overhead. Those are the frequent things you'll hear. So accountants will say SG&A. In your estimate, it's going to say overhead, and that's just kind of the general term that that construction people will use. And then you're left with your net operating income or your net income. So there's this balance, this little part at the bottom, which it doesn't typically apply. If things get put down here, it's because your business is doing a little bit more than just construction, right? This other income, it could be you have an account at the bank that accrues interest. And that income could be, a couple $100 over the year just because you've gotten money there. Now, again, the income at the top, this is the way it's however you put in your chart of accounts. But typically we see service, new construction, maybe it's divisions, if it's industrial versus commercial or whatever. But you're not going to have a bank income because that's not your main thing. That's an other income, right? So really this net operating income, it could be the exact same, or depending on how things go in your business, it could come down to the bottom. This other expenses also could include things like your taxes, your payroll tax, your income tax, donations, things like that. So at the end of the day, your net profit is what's left over. So that's going to be your net income. And on this one, you can tell it's still over $3 million. Now, things that I don't see in here that I would want to see are probably your overhead, like your accountants, your obviously there's no software in there either. But we'll go through. I'll go back up to the top now, and I'll show you how to look at these. So if I want a really clean profit and loss, I'm going to look at this and I'm going to say, okay, 4,000 is my parent chart of account number. All of these ones below it, the 4,100, 4,200, whatever, however you name them, are going to be considered income. So I don't really want things to go to the income because that doesn't delineate. What does $300 of income mean, right? So I can click on it and I can actually see what was coded there. Okay, it was an invoice. Okay, that's obviously in the wrong place. So I can go in, I can edit it if I want to. And I can change, okay, I don't want this to go to the general ledger that it is. See, it's going right here. There. Now, because the general ledger was built before this cost code, now I've redone it. I can preview and save. I'm going to leave it because I like to have that kind of an example. But that would adjust where these numbers go. That 300 would then pop down. This number would go away because there is nothing on there. It's not going to show. You can have 1,000 things in your chart of accounts, and it's only going to show the ones that have money put to them. But I recommend not putting a ton of chart of accounts because every single person that touches it will start to think that this number goes into this pot of money. And if they put it in the wrong pot of money, you're going to have, you have Mary that puts it into income. You have Susie that puts it into new construction. And then you have Ron who puts it into commercial construction. And then all of a sudden, all the projects should have just been in one pile, but now you have 3 different piles because of the way that it got put in the system. And then you have a lot of cleanup you have to do. So I'm going to move down to the next section, cost of goods sold, cost of construction. Again, same concept. This is the cost of construction, it's 5,000. Then you have all these codes underneath it, even 5,500. Now this is just a nuance of how it's put in the system. Because it's the subcontractor at 5,500 is not considered a sister or a child version of this. It's not underneath the 5,000 code. It's considered its own. Now, if we wanted to be more technically correct, we could just go down to chart of accounts, switch it so it's underneath it, has a parent code, and then everything should fall under this cost of construction. But so that's just the way I like to see it. I like to be very methodical about it. I don't like to have all these extra lines because it confuses people. When they look at this, they're like, how come this one's different than that one? Why doesn't... We know why. It's just because we didn't put the numbers incorrectly. But really, it just adds confusion. So, again, we see $11 put to the wrong code. We can click on that. We can figure out what invoice was put to the wrong place, what happened. We can move it. It looks like it was just a gas receipt, right? So maybe it was a cost of construction and it just didn't get put to the fuel cost of goods sold or the equipment cost of goods sold or whatever you decide to put it on. So then we can go down, we look at expenses, same thing. Anytime you want to dive into one of these and figure out what went to licenses. I didn't think I spent $2,000 on licenses. Oh yeah, this credit card payment, that was because I did have to take my master's exam in this state that I did. Hey guys, if you like this video, please like, subscribe again. If you want any other videos, please just DM me, leave a comment, find me on LinkedIn, whatever you want, I'll find it, and I'll make sure I make a video. Check out these other videos that I'm making in the next couple of days. It's going to have the balance sheet, how I look at that, why it matters, what we look at, what we look for. And we're going to look at what are the differences in different accounting people. There's so many different roles. How do we know who to hire? How do we know who does what and who's responsible for what? So thanks, guys. Have a good day.